What's up traders, welcome to Failure to Displace. In this video I'm just going to give you a quick live execution that I've just executed in the first macro of the London session on EURUSD. This is just a quick overview of the trade, just try to get it out there as quick as possible so you guys can see this more or less in real time how it played out. Before we jump into the actual live video, please do drop me a like. I'd really appreciate the support. See if these kind of quick turnaround videos are worthwhile. Leave any comments or questions down below, and also smash the subscribe button. I'm dropping videos like this more or less every single day. Into the macro, come up, this is an hourly unicorn, this purple area. The macro's pumped, we've had our first inversion fair value gap. Closure through it, enter, close, over the fair value gap. We've generated relative equal lows at the beginning of the London session, which is the ultimate draw on liquidity. This is the macro open as this line, so this is just as the 233 macro opens. So I did have a gent yesterday asking about macro times, suggesting that maybe the macros are different in London. It should be the 950 or 250 till 310. The indicator that I have and what I've seen online is that the London macros do begin at 233. So we can see that we do get a manipulation into a point of interest. This is a sweep of New York session high from yesterday into the unicorn, so we swept liquidity into the unicorn, and then the inversion fair value gap closure through. Ultimately 3.8R. My strategy is to close out at 2R, which will just be taking the macro low. Previous macros are obviously all the way down here. We do have the New York macro. Obviously we swept the macro high, New York macro low at that point. So we swept the New York macro high obviously by taking out New York AM session, the New York macro low, previous low down here. Maybe that would act as support. Just testing, don't know. That's the macro low. Which, look at that, that actually falls directly in line with the relative equal lows that I highlighted. And oh, we've just hit our 2R. So that was instant zero drawdown, 2R trade. The stop loss was just above this order block. So we had the inversion fair value gap plus this down closed candle as the order block. Didn't want price to come above that, so I wanted it to accelerate down. It's just done that, swept our 2R, so that's the trade. Closed in full. Ultimately, what would be really nice would be to come down and sweep these relative equal lows that we highlighted, which just happens to be a previous macro high, which would give 3.9R. So I'm just taking low hanging fruit 2R trades at the moment while I'm testing this. To the gent that was questioning, the closure over did come at 250. So if the macro is indeed 250 and not 233, well, there you go. We've got this acting as a breaker block now, or a mitigation block, whatever you want to call it. Potential resistance. I'm going to put this here so we can see we have hit take profit. So I believe the entry pattern that I'm looking for the macros on my back testing is I'm looking for an inversion fair value gap. So I'm looking for price to take some form of liquidity with displacement, and then for that PD array to fail, take me in the opposing direction. Now, I do have a bearish bias today on Euro. I believe the Dixie is bullish. I believe that the Euro will continue lower. So this trade did fall in line with my overall daily bias. I'm still not sure whether these macro trades, whether I need to have a daily bias or not. I mean, the key thing here is that we came into an hourly unicorn, this purple shaded area, and then have rejected. Then the inversion fair value gap gave me the confirmation to take the short trade. So we've come back, tapped entry. This is this down up closed candle here. So this little doji there is an order block. So all we've done with this retracement is rebalance these two inefficiencies that we'd left. Bearish fair value gap, come back, rebalance those into an order block, and then moved away. That's a logical retracement. If we start closing back in above here, then that would make me believe that we're not going to get the actual sell side down here. But as it stands, this kind of makes sense. There's no 5-minute unicorn, obviously. I am still monitoring for the 5-minute unicorn entries. The 5-minute unicorn would not be while down here. So the market structure is a low, higher high, higher low, higher high. This doesn't count because this is the low that broke this high. So this is the origin of this sweep. So we need to trade through that back into here. So this area here is the 5-minute unicorn area that I would be looking for. So obviously quite a significant drop at the moment, whereas this scalp that we've taken on the 1 minute in the macro, much more precise entry. I mean, I ended up with a 2.5 pip stop loss. So again, I can take tight stop losses on my broker because I'm using I only have literally a 0.4 to 0.6 pip stop. 0.4 to 0.6 pip spread on Trade Nation, which is the broker I use. Likewise, if you're trading from the US, I would highly recommend Blueberry Markets. They have similar spreads to Trade Nation. Both seem really great. I've had good contact with both brokers. So we do have news today. So this could be, here we go, look, 315 French PMI, 330 Euro, German PMI, and then the Euro has flash PMI as well. And so tricky conditions. So again, another reason why the two are just get in and out of the market as quickly as I can. Zero drawdown, straight to take profit. So really lovely trade. Could potentially have left a runner. Haven't done in this instance. Expecting these equal lows to get taken, and again back down to our 5-minute unicorn if we truly are bearish, but we've got news coming. So this large bullish candle going back into here looks very bullish, so I wouldn't be surprised if we continue higher now. This could be manipulation before the price run. We've obviously got a new week opening gap above us. Large bearish fair value gaps. So lots of inefficiencies up here to be filled from yesterday, because yesterday was such an aggressive move down all day. Again, we caught that high. Should have held shorts, because I could have had a short for the whole day. That's crazy. We are into optimal trade entry. This is another thing, obviously, I've not mentioned that in this video yet. The 1 hour unicorn is into optimal trade entry of yesterday's bearish range. So we've not quite hit optimal trade entry yet. I believe this line here is the optimal trade entry. So we're coming back into our entry, watching the body. Is the body respecting this inversion fair value gap or not? If we start closing above, then price is likely to go higher. If we respect the inversion fair value gap, close below it. So we're closing through it. We've closed above 50%. I believe that this is now less likely to hold and we will come and seek higher. So it was, again, a wise choice just to bag the 2R. We're outside the macro now. So the macro finished at 3 AM. We're into silver bullet hour. And again, just to recap, what I'm looking for in the macros, I believe, is I am looking for a run on liquidity and then a failed PD array, specifically an inversion fair value gap inside the macro hour to drive price lower. And it's a singular fair value gap. So this is coming from Doji, I think, Dodgy YouTube channel. He does a lot of stuff on inversion fair value gaps. It seems really interesting. Well, if you couple the inversion fair value gaps with the macro, it seems to be really, really powerful. So we've taken the high. We are going into optimal trade entry now. We've got news dropping shortly. So that was the trade. Really quick 2R. I mean, I was in the trade for 1, 2, 3, 4 minutes. Done and dusted. I hope the analysis was useful. I'll do a higher time frame analysis now, going through the actual daily chart and how we established a bearish bias for the day. But that was a quick scalp shot. If you did enjoy the video, please do drop a like. I would really, really appreciate it. If you've got any questions or comments, leave them down in the comments section below. And likewise, do consider subscribing. I'm dropping analysis like this more or less every day, every time at least to take a trade. It's part of my journaling process. So if you find it useful, make sure you smash the bell icon. You'll get notified as soon as I drop these videos. And I'd really appreciate the support. Thanks for watching. I'll see you again in the next video.